All right, ladies, I'm going to go ahead and get started here. This broadcast is a little different than the other Google Hangouts that we've done in the past because it is going to be live so that I can record it and play it back later on my YouTube account. So you can enter a group chat by typing in a message, and then I can answer that message here if you have a question about anything that I'm talking about as I go through. I'm going to be using the sheet that I handed out at our last success meeting. It's the tax guide used by the Tupin National Area, and I also emailed that out to you guys so that you can follow along with it as I proceed. So we did talk at success meeting a little bit about the records that you need to keep. Of course, your total receipts over the year, and that can be as simple as just adding up your total sales for each of the months and recording January through December on even, on a Excel spreadsheet or even a piece of paper, and summing the total sales and include the sales tax with that. And then we also did talk about keeping track of your anything that is outgoing. So any of your expenses, you can track that throughout the year as well. Personal use items, and I think that'll kind of come up as we go through this sheet. So, all right, I'm going to start at the top of the of this outline, and it is asking for total sales and is asking for you to include your sales tax in that number. And whatever you do, you want to be consistent with keeping sales tax or having no sales tax. And I'm just going to recommend that you prepare for your accountant your total sales, including your sales tax, as shown on this sheet. You also are going to want commissions and prizes, and the you won't need to worry about commissions, ladies, on your taxes unless your total income for the year is more than $600. If your total income for the year is more than $600 between prizes and commissions, then you will need to have a 1099, which you'll receive from the company, and you would write down your total commissions and prizes there. Again, if you have less than $600 in commissions from Mary Kay Cosmetics over this past year, you don't need to worry about a 1099 and either commissions or prizes. Okay, one of the things that you're going to want to do if you haven't done it already is to take an inventory count. And the way that I do it, I think it's a really simple way to do it, is I take one of our paper order forms and I just jot down, I fill it out and with what's sitting on my shelves. And you don't need to be specific because you're just coming up with a total wholesale and resale cost. And so for like True Dimension lipsticks, for example, you don't need to write down how many colors you have of each. You're just going to write down the entire number of True Dimension lipsticks you have in that section. Okay. Same thing with eyeliners. For example, you can just write down your total number of eyeliners. And I kind of jot that down in my paper form off of my shelves. And then I actually go in and input it on Mary Kay InTouch as though it's an order so that it will sum up for me. And then I print that out. So you will need, if you guys haven't done that, to take an ending inventory. If for some reason you have I'm sure it has, because we're almost halfway into the month, you can go back and adjust it for any purchases or sales. But you need to be writing down in this process, it's going to ask for your ending inventory and your closing inventory. And then, of course, your beginning inventory, if you're a brand new consultant, is going to be 0 if you signed up this year. If you are an existing consultant that was in business the prior year, then you will go back to your taxes and look at your closing inventory and input that on this sheet where it's asking for that. You will write down your Section 1 total purchases, okay? You can add this up from your packaging slips, and I do my accounting through an accounting software called Quicken that will add up all of my purchases.
Oh, we got it.
No, this is a different one.
And it will summarize that for me in categories. And so
it says it's live.
Most simple way, ladies, for you guys to do that would be for you to just
is she on here, you guys?
And then just add those up. And ladies, if you're joining the call, make sure you don't have any background noise because we are recording this. We're running this live and we're recording this so that people can listen to it later.
Yeah.
So if you do have questions, please, go ahead and just type that in here, and I can answer that for you. The next item on this Accounting Unlimited sheet is personal use product, and the sheet says in parentheses,
this is really weird.
Unseen, physically cannot see. So what that is.
And this says live, so it is right now.
Yeah, so Karen, I can hear your voice, and we're recording. So if you guys have questions, go ahead and ask a question or type a question, but we can hear everything that, as you're joining the call, we can hear everything that you guys are saying. So personal use product, what it means where it says unseen, physically cannot be seen, that means that that is product that you're using that
just hang with us and you can hear.
In terms of advertising. Other people can't see, I'm going to do probably sunblock, right? That isn't a product that other people can see that you're wearing, okay? Of course, all of our color cosmetics are products that other people can see that we're wearing. And I would include my skincare because I think people can tell that you're using skincare because your skin looks better when you're using skincare. So that's what the first 4 items are on that list. I'm going to move down to advertising. That would be PCP. If you do anything like pay for a booth, purchase leads, anything like that would go under the category of advertising. Insurance, it's a good idea to have insurance on your Mary Kay product, and there is a company that Mary Kay uses that provides that at a very affordable rate if you guys don't already have that. If you have inventory on a credit card and it's not all paid off, interest on any loan for your inventory, you would want to make sure to write that down here. Dry cleaning for products for clothes that you use in your Mary Kay business, you'll want to include that. Legal and professional. I always have my accountant's fees, of course, under this. So anybody that you pay, to hire to do your Mary Kay business. I also, as the director, have some assistants, and I pay their. This is where I would write down that if you're paying anybody to support you professionally for anything in your Mary Kay business, that would be here. And I will say that my accountant really encouraged me and taught me to put my children to work in my office and to include them on my payroll. And so I'm an empty nester now, but up until the time that my youngest left to go to college, I had my kids doing things in my office. As they got older, they could do more computer things, but even when they were little tiny kids, I had them labeling my books, emptying the trash, cleaning my mirrors. So if you do have children at home, I think it's super smart to get them on a salary, and you would include that here. Office or bookkeeping expenses, if you pay someone to do that. Weekly meeting fees. And I would recommend, ladies, that you keep, I run all of my expenses through either my business checking account or my business credit card. And so it's very simple for me to do my taxes. And because I use that Quicken software, it will add up into categories that I create. You know, I could have, if I was a consultant, a weekly meeting fees, and they would just be added up. And that Quicken software links up to my business checking account and my business credit card, and it automatically sums up all of my expenses. So I could just go to weekly meeting fees and it would be summed there. Supplies is kind of a catch-all category. You know, if you have new team members that you purchased roses for, that would go under supplies. Probably supplies, let's say you got cotton balls or, you know, sponges or something at the store, headbands would all go under the category of supplies here. Okay. Travel expenses. If you attend seminar, or if you, you know, you're smart to actually write off travel expenses to your family, even when I, you know, take a trip to visit my parents in Utah, I have consultants out there and I have customers out there, and I make sure that I am doing 50% of the days that I'm there, I do some type of business so that I can write off my personal expenses for that trip. And so if you have more questions about the travel expenses, we'll talk about that later. But make sure that, you know, if you're even getting in a car and traveling to see someone, if 50% of the days over the course of that trip, some type of business occurs, you can write off, can't write your family's expenses off, but you can write off your own expenses. And so remember to, you know, not neglect to include those types of travel expenses. Meals and food are separate. Don't put your travel expenses in your meals and food, ladies, because meals and food are not a 100% write-off. It's a reduced percentage of write-off. So if you're eating meals out of town, make sure that you put that under travel expenses, because you'll get a greater write-off for doing that. And one of the things that I do to make it easier, for example, when I go to seminar, I just Google what the per diem in Dallas, Texas is, and there's a daily per diem that's anywhere from, you know, $30 to $40, somewhere in there, that you can write down for expected food expenses when you're on a trip, and you won't have to track all of the individual expenses for food. You can just put down a per diem. If you have incurred any bank charges on your Mary Kay account, that's the next thing on that list. Make sure to include that, as well as any ProPay fees. ProPay has a summary inside that you can go there and look at the total ProPay fees, which has been an expense for you over the year. I'm trying to think of dues and publications. I can't think of any dues and publications that I would have with Mary Kay. But if you're subscribing to a magazine or something like that on beauty, you know, something that would be a publication that would support your business, I suppose that's what they're indicating there. Postage is a big one for me, and again, because I pay for that always either out of my business credit card, on my business credit card, or out of my business checking account, I have that linked to my Quicken, and it totals that. Otherwise, if you guys want to, we've talked about this before at Success Meeting, you can actually just have, you know, even a piece of paper or an Excel, you know, place in Excel where you are just by month, you're saying, okay, December 2014, and you have all of your receipts in an envelope, and you have total all of those receipts for, you know, your total costs in those different categories over the month. Freight expenses, you do want to make sure that you include those. You can see that on your packing slips for your orders. If you receive the 1099, you will have a total of all monies spent on Section 2. Otherwise, you can get that and from each of your packing slips and write down January through December and total that to include here. Workshops or training events that you attend, you want to include under workshops. And then I'm gonna move up over to the top right part of this underneath commissions and prizes, and let's talk about, because telephone and communication expenses are significant. And so if you have a cell phone, and you may want to check, I know that tax law changes, but in the past, the tax law said that you could assume a 50% cost of the entire cost of your cell phone. And so I'm not 100% clear what the current tax law says on that, so make sure that you have your total cost of your cell phone over the past year. If you have a second line, many sales directors have a business line going into their house. I have a business line going into my house. Of course, that's 100% write-off. If you have internet, again, talk to your accountant, but the total amount of the cost of your internet, and your accountant will be able to advise you as to the percentage that you can write off of that as well. All right. Now, the next section says current year assets purchased. Okay. And I want to make clear that let's say that you're a new consultant, you just started your business this year or last year. Even if you purchased a computer 5 years ago, or you purchased a printer or office equipment, make sure that you kind of jot down a list of those items, because your accountant can advise you on how you can depreciate, you know, forward some of that from the past. So in other words, include office equipment, new cell phones, any kind of equipment that you would use in your business. Make sure to write that down with the date and the cost, even if it's in the past 5 years, because you can go back and actually write off a portion of those. So here, though, you would really want to think about purchases you made in 2014. I purchased a new cell phone in 2014, and so that's going to go down here. Because I have a dedicated office space, all of the redecorating that I have done, new carpet that I did before the end of the year, new chandelier, new wallpaper, all of the things that I'm doing to update my office are a write-off for me, because that's a dedicated space. I don't know if you guys have any questions. Does anybody have any questions about types of equipment that you can and cannot write off? Gosh, if you use a camera, most people use their phone, you know, for Mary Kay. Computers, printers, you know, if you bought new physical phones for your home, any of those things that would be in an office, including even furniture that you use in an office. The IRS does state that you have to have your office space 100% dedicated to your business. So they can't walk in and see a bed set up in your office. If they were to walk in and see a bed set up in your office, they would assume that that is not being used for a business space. So, okay, let's move down to vehicle expense. There's a couple of different ways, ladies. If you haven't been really good in having a log in your car that is tracking, you're supposed to put your date, the total miles, and the purpose of that. Mileage. Like if it was I went to a success meeting, I went to the store to buy supplies, I went to deliver some product. If you haven't done that, you can go back and try to recreate 3 months of the year, and then it's okay. The IRS will make the assumption that you did a similar amount of mileage for the rest of the year. Okay. You can also, if you want to do this in 2015, you can track your mileage the first week of every month, and they will assume that that is indicative of your mileage. I want to just check in and make sure you guys can still hear me and see me, because it looks like the screen has kind of frozen from what I can tell.
I can see you. Oh, now I can't. There you are.
So, does it look like you can see me in motion or frozen?
In motion.
Okay, because on my end, for some reason, it's completely frozen, and I was in motion before, so I just want to make sure. Do you guys have any questions about anything up to this point?
How about our manicures? Are they tax write-off at all?
That is a very good question, and I will tell you that Jack Vetcher, would tell us that he would recommend that we write down, if we're getting our nails done or our hair done, that we write down what event, like if there's an upcoming Mary Kay event that we're preparing for, that we would try to connect it to that. And I do write off all of my nails and all of my hair, because I'm constantly going to Mary Kay events, and it's an important part of the image that we're presenting. So I do write off all of my nails and all my hair. That's a great question. Along that same line, let's talk about clothing, because sometimes people have questions about that. Now, technically, according to the IRS, if you buy clothing that you wear anywhere other than Mary Kay, you don't get to count that as the write-off. So now if you purchase like a black skirt that you wear only at your success meeting, your red jacket, if you're, when you become a director, you can write off all of your director suit. The other thing that you can write off is the gowns that you purchase when you're, attending seminar. If you're buying a dress or a gown for that, you definitely can write that off. But it is really supposed to be specifically used for Mary Kay only. Yeah. So under vehicle expense, I'm going to jump back to that. You're going to put your total vehicle miles, and you're going to put the total miles that were Mary Kay, because your tax accountant is going to need that. You will want to include lease payments, all of the times that you wash your car, gas, oil, repairs, interest on loans, tags, and insurance. All of that you want to include along with your total miles. And what I do on mine is I always do a percentage. I've established a percentage of miles. If I were audited, I would have to go back and recreate 3 months, where they could make an assumption that that's my pattern for the year. Now, if you have a dedicated home office. And I actually have 2 dedicated home offices. So what I have to provide for my accountant for that is total square footage of my home, okay, and then the total square footage of the dedicated areas that are used solely for Mary Kay. And from that, he wants to, he asked me to include my utilities, gas, electric, water, sewage, garbage, cable, all of those things. And then I'm entitled to take a percentage based on the percentage square footage my office is over my total home's square footage, okay? And here, real estate taxes, insurance that you pay, homeowners insurance, repairs and maintenance. So actually, I'm going to talk to my accountant because we just spend a whole lot of money remodeling our home, and so we actually should be entitled to take a percentage of that cost based on the square footage of my office this year, which makes me excited. Any mortgage interest you want to put down here, of course, which is a cost that they're going to take into account, and then it's asking for the purchase date of your home. Now, I don't know if any of you guys are brave enough to do your taxes by yourself. My first year in Mary Kay, I did my own taxes, and you are going to have, be using the long form of the 1040 if you do that, and you're going to need a Schedule C and a Schedule SSE. I did just send out an email to you guys that included 2 recommendations for accountants that know Mary Kay inside and out. So they will not let anything slip under the they're not going to let you miss out on any deductions that you could be taking. So look in that email, and one of them is local, one of them is my accountant who is out of town, but he's great and he can work with you with Skype and and faxing things, and so I love working with him. He'd be my top choice out of those 2, but I did give you one that is a local tax accountant that does lots and lots of Mary Kay. And as I mentioned in the email that I sent out to you, Linda Tupin I've heard her share the statistic that on average her gals probably get an additional $1,500 a year back on average if they're working their businesses and they're using the right accountant. So any other questions that you guys have as we wrap up here? Do you have any other tax questions that you're wondering about?
Can you hear Karen and I, Terry?
Yes.
Okay. Can you see us?
I could see you before, but for some reason my screen has frozen, so hopefully it's still recording.
Okay. Well, I do have a question because my accountant was sick for 1 year, so we had to go to a different accountant. And she told me if my business was not producing X amount of dollars because I've already been in it for 4 years, that I can't claim anything anymore.
Okay, this is why you have to go to a very specific accountant, because this is one of the things that Jack Fetcher would tell people. He would say, be careful who you're going to, because in our business, in Mary Kay Cosmetics, you can continue to show with your write-offs. You can continue to show a loss with your write-offs. I mean, if I have all these write-offs for my home and stuff, and I'm a consultant, and I'm showing a net loss, then you can continue to do that year after year after year after year. So that is...
Makes no difference how long you're in it.
Makes no difference. That just means he doesn't know our business enough. So you're fine, Lynn. I know for a fact you're fine.
Yeah, well, we're not going back there again. I know that.
And if you guys choose that you want to work with Rob, he can just work with you Skype over the phone from your own home, and you don't even have to go to an office. And I like that because I don't even have to drive to anybody's office. And he is he's assertive, but he's honest, and he knows the business. So you guys certainly can, I gave you his number on that email. Does anybody else have any other questions?
No.
No other questions?
No.
Okay. So make sure you take your ending inventory, you guys, like immediately if you haven't already done that. In fact, I haven't already done that, and I'm going to put it on my list for Karen to do to make sure that we get that. Okay. One thing on your inventory, okay, maybe a couple things that we should say, especially for new consultants. If items on your shelf are limited edition, okay, limited edition items, you do not include in your total inventory. Also,
You don't do what with them?
You don't include them as part of your inventory, okay? And what you want your inventory to be as small as possible because you're going to get more money back. So if you have items that are limited edition, they're not permanent line items, any limited edition items you do not count as part of your inventory. If you have product that is outdated, it's more than 3 years old, because, or you know, some of our product that have SPF expirations, you know, earlier expirations. If anything is expired in any way, do not include those items. And this used to be more of a concern, but now the way that they do Biz Builders, you know, they used to send us free product. If there's any time that you get free product, like for example, this month, Mary Kay is sending people free product that order $250 worth of product wholesale this month. You would want to make sure that you would write down any free product that you get over the year, because you do not have to include free product on your total inventory. Okay, and so make sure that you're looking at that. Anything expired, limited edition, anything that you received free. Now we don't receive as much free because we just get money off our total cost, which would be reflected in the total cost we spent already. Another thing that's a common question, and then we'll wrap up here. Another thing that's a common question is that people feel like they have to keep track of everything they've used as demo or that they've given away free as a bonus to their customers, or even gifts. You can give people up to $25 or $30 gift of Mary Kay, even if it's not for a business thing, it's your friend for her birthday. You can actually write off up to $25 or $30 of like gifts that you're giving. And the thing that I think a lot of consultants get confused about is trying to keep track of all these things. I pulled this off for demo. I gave this away as a gift. I gave this away as a hostess gift. But what happens is that between your starting inventory and your closing inventory, that is already taken into account. Because if I give a hostess $25 worth of product, when I go to count my inventory at the end of the year, I'll have $25 less inventory. And so I don't need to take that off again. Does that make sense?
Oh.
So that would count for like the school benefits and baskets and things that we had given away.
Yeah, so anything that you've given away, it's already going to be accounted for. You don't need to account for it again, because it will have lowered the total amount of your inventory, and you won't show receipts of money for it. And so it takes care of itself. So that's a lot of accounting you don't need to worry about.
Okay.
But just know, it's good for you guys to know that you can give your girlfriend a gift of Mary Kay, and you don't have to show that as that you bought it from yourself or something. You can just give it to her, and it isn't a write-off. So when you're giving away Mary Kay, you're actually creating a write-off for yourself. So any last final questions before we close up?
Now, I've already sold some of my product since, you know, before taking my inventory. Do I have to deduct that, or how does that work into my...
Yeah. If you have ordered and added to your shelves since the first of the year, or if you have sold, you're going to add that back to your inventory as though it was sitting there. You want it to get back to the way it was at 1/1, you know, 2015. What was your inventory at that time?
Okay.
Okay, and then if you guys have any further questions, feel free to text me, email me, call me, and I'll answer them at that time. So, and this will be recorded. We're going to start doing these interactively live this way so that we can have them recorded. And then I have a YouTube account that you guys can go to Terry Beckstead on YouTube and watch any of our trainings again if you need to go back to do it. So anyway, thank you for being on the call tonight. And remember that we are doing the Winterize Your Skincare makeovers next week. Plus, we're going to have some awesome training. And so hopefully we will see each of you there. And then Saturday morning, I'm in charge of the makeovers at 10 o'clock at the studio. So I would encourage you to go find some people that would love a new you, new year makeover. And so we will see you next Tuesday or perhaps even this Saturday morning. And if you haven't contacted me to talk a little bit about your goals, ladies, please do that. Okay? You guys have a great evening, and I will talk to you soon.
Okay.